Good morning, everyone. Good morning, everyone. I hope you're having a great and excellent Monday morning here in our beautiful and awesome city of Austin, Texas. It is July 13th, 2026. Hard to believe that's already July 13th. I mean, it's just crazy how fast time goes by. Y'all, lots to go over this morning. Excited to see what's happening within the Austin market. I hope y'all had an amazing and excellent weekend. We're going to start by going over the tried, the true, the amazing, the just invaluable or valuable, whichever one it is. You know what I'm saying. New listing to pending ratio, the best leading market indicator available for the entire market. Everyone is obsessed with lagging indicators in this business. Everyone's obsessed with it. Like, oh, what's the sold price? Okay, well, whatever. That tells us what happened 90 days ago. Well, what's the months of inventory? Well, that's even more irrelevant because as you enter the third quarter, you're comparing a little bit less inventory to the highest selling season. The most deceptive number in our industry from July all the way to October is months of inventory. Take July 13th as an example. We know that demand is contracting because our market has a very early selling season. We know that our market peaks when it comes to pendings right around the May timeframe. And if you don't go pending, then you don't sell. But prior to that, so think about everything that went pending in May, towards the third or fourth week of May. When do they close? June, July. And what happens with the active listings? Well, they tend to peak about 2 months. 45 days is the average. Number of active listings peaks 45 days after the pending peak. So pendings will peak towards the second or third week of May, and then pendings start going down, but then the actives will keep on going up. And we've got a chart for that. So actives peak anywhere from 40 to 45 days after pendings peak. So we keep on going active, but then we are dividing that by the total number of sold, which is huge. But then something really interesting happens. June, July timeframe, the actives peak and then the actives start pulling back. So you've got this weird time in the middle of May where you have less actives where you're comparing it to the most number of sold properties. Let me show you some of this really quick because it's really important for us to realize that. And look at this one, right? So here's all the pending peaks and then look at the active peaks. So we know that actives peak after pendings. But then you take a look at June, July timeframe, actives start going down. But you're comparing less actives to the peak number of sold properties. What happens with months of inventory? It goes down, not because of what the market is doing today, but because of what it did 90 days ago. Lagging indicator. Everyone's obsessed with months of inventory. It's a huge lagging indicator. That's why we're obsessed with activity index, even absorption ratio, sold divided by active. It's good to have all that information. There are tools in your tool belt. It gives you a really good insight between what's leading, what's lagging. But we need to be obsessed with the new listing to pending ratio, the activity index. It tells us what's going on right now. So some fascinating thing. We got a very unique market here in Austin. You know, people think, oh, the market is July 13th. The market, you know, it's the summer selling season. No. We don't have a summer selling season. We have a early summer selling season. The market right here peaks second to third week of May. We've got a very short selling cycle in Austin. And the whole June, July, that's a 20-year market. 20 years ago, that was the case. 15 years ago, that was the case. That's no longer the case. Very short selling season, very early into the year, which is why on the listing side of things, when you get that phone call from clients and they're like, yeah, I'm thinking about selling, we're wanting to put that property in the market February, March. March is when we want to put the property in the market. By the time you get in the market in June, pendings are already down. They're already contracting. Let's go ahead and start updating the historical pending to see what happened over the past few weeks. We know that agents are really bad when it comes to updating the pending information. This is going to be Caldwell, Burnett, Bastrop, Hayes, Travis, and Williamson counties. We're going to go from June 29th all the way to July 6th. Active under contract. This stays at 502. Let's go ahead and click on pending. This is going to be 396. Not that big of a difference. And let's click on 22nd to the 29th. This is going to be 460. Let's go ahead and click on 460. 15 through the 22nd. This is going to be 524. I'm going to do one more week. 8th through the 15th. 529, which means we need to go one more week. 1st to the 8th, 537. I stop when I get 2 weeks where the number doesn't change. 581. Okay, so now we're good to go. Now we can start updating the information for this past week. Keep in mind, it's a 10/12 right now, which means we're still going to get more active listings coming on the market, new listings. But let me go ahead and show you, before we do that, some of the historical. And because I want you to guess. Forget anything else that you see like right here. Like ignore all that. This same past week, a year ago, 1,205 listings came on the market. Now we're at 10/13 right now. Meaning there's 13 hours and 47 minutes left in the day. Where do you think we stand right now on the number of new listings? Last year, we had 1205. Do you think that we're under that, but we're going to beat it? Do you think that we're already over that? We are now, without us updating this week, we're 6 weeks in a row where the number of new listings has exceeded the same time last year. So do you think it's going to exceed this week, yes or no? Let's just do a simple yes or no. Do you think that this week is going to mark the 7th week where new listings entering the market are going to exceed the same week last year? Yes or no? Let's get some feedback here. Okay, Ryan is starting us off yes. Maria, yes. Sonia, yes. Okay, we've got a resounding yes. So let's figure it out. Let's see the number. I need to drink some coffee. Okay, new listing. Wow. 1212. We're already +7, and it's 10:14 in the morning. And we're already +7. So we're going to get about another 75 or so listings come on the market. So we're already positive. Already positive. Let's take a look at price increase. 406, that's such a high number. We are seeing so many price increases. Bad strategy. Not a wise strategy. Oh, look what's happening now, though. 23, 25 price drops. Okay, we had 79% 2 weeks ago. We're at 85%. Still pretty low, 85%. The average so far for the whole year is 87. We hit 79. A ton of price increases. Man, that number surprises me. 406 price increases. These builders are just raising prices. I think it's going to backfire because they're not tracking this. They're not tracking this right here. It's going to backfire. Let's take a look at back on the market. Okay, 196 back on the market, 16%. What does that 16% back on the market show you all? The lower the back on the market, the more concessions the sellers are giving. The hotter the market, the higher back on the market. The cooler the market, the lower back on the market. It's counterintuitive, but we've got the data to prove that. When you're at a crazy hot market, look at this. Let's go back to like the hottest time ever in Austin real estate. Right here. 183. This was December 20th. Is that the hottest? 186. This is February 15th to February 22nd. Oh, that's like something happened there. Only 195 new listings. What happened? Was that like a storm? Did a storm happen that week? That must have been a storm because look at the number of new listings. February 2021, February 2021.
Yeah. That was when we had Snowvid or Snowpocalypse or whatever.
There you go. That's exactly it. Look at that. Thank you, Melanie. Look at that. That was Snowvid. February 2021 historical winter storm. Y'all, I'm telling you, the new listing to pending ratio is like rings in a tree. You can just look at it and say, hey, something's not right. What's going on? Oh, yeah, that's right. That's what happened. But even if we get rid of, Snowvid there, look at this. Look at the high new listing to pending ratio, which means hot market, and look at the back on the market percentages, 40, 43, 32, right? So the hotter the market, the higher the back on the market. Why is that? Well, buyers feel like they were impulsive. Buyers might be submitting offers on 2 properties. They get both under contract. They terminate one. Sellers get a little bit more on the greedy side, right? Oh, not greedy. I hate that word. They use the leverage of the market to their benefit by saying, no, I got 5 offers. I'm not going to give you any concessions. I'm not going to do anything. And so therefore the buyer terminates because the buyer feels like, oh, I went at $20,000 over list price. Why can't you give me a $40,000 concession? It's like, that's not how it works, buddy. And then, of course, the property terminates. Whereas when the market starts cooling down, when the new listing to pending ratio starts getting into the blue, the cooler phase, the sellers are saying, hey, don't put this back on the market. Took us 45 days to go under contract. So, okay, they're asking for $5,000 closing costs. Fine, let's negotiate with them. The listing agent is saying, hey, you don't want to go back on the market with that inspection report. Give them the $10,000. This is the best deal we're going to get. So when the market cools down, the back on the market starts going down. Now, let's take a look at the active under contract. 362. This is where you get to guess. Man, it's going to be a tough guess. Okay. Let's do some guesses here, you all. 5 guesses. 5 brave souls to guess the number of pending. Who's going to start us off? Sonia starting us off at 222. Melanie Sonia came in at 188. Okay, Melanie's coming in at 185. Sonia's coming in at 188. Man, you guys are like in the ones. Man, wah. Come on, have some. Charmine coming in at 222. Okay, let's got a few more guesses. We've got 3 down. Let's just get a few more. I should make it to where everyone has to guess. We got quite a few people here in the call. Come on, write some numbers down. We've got Ryan coming in at 205. We've got Nadia coming in at 213. Okay, let's get a few more guesses. I'm really curious as to what y'all are thinking here. Anaí at 235. Oh, Anaí is like, I'm bullish. I'm just excited for the market. Let's get one more person. I'm super curious. One more person. Y'all, I am in such a good mood this morning. One more person to add a guess. I know we've got more than 5, but I just feel especially excited this morning. Okay. Y'all ready? Yikes. Ooh, 164. 0.37 ratio. All right. We officially are 3 weeks where the new listing to pending ratio has not only underperformed the previous year, same week last year, but it's really starting to contract, right? So 0.68, 0.68, last year's 7.4, 7.9. When we take a look at, we already have 7 new listings on the positive side without counting the 50 or so listings that are going to enter the market, 50 to 60 new listings that will enter the market between now and 11:59 p.m. tonight. And we're already positive. We're definitely positive on the price increase. You know what? Let me do the monthly, and then I'm going to do a little bit of research on that price increase. Like that's going to backfire. That strategy is going to backfire. Not a fan, because the price drop is now up. Interesting. So here, price drop was up. This is shrinking. Look how much the price drop is shrinking. We had an increase in price drops 2 weeks ago, but then we still have just a ton of price increases. It's got to be 95% new construction. It's got to be that. So we're down 48.5%. Man, a 0.37. I was not expecting that. I was expecting something closer to like the 190s on the pending, not 164. And there's nothing that happened this week. And what happened was beautiful weather. It was nice. It was pleasant. Like, I've been warning. I even said it on Friday, like, y'all, it's just like the momentum is slowing down. You've got to be obsessed with your activity index. You've got to be obsessed with the leading indicators. And I started saying that the momentum was slowing down now 3 weeks ago. And this right here certainly confirms that. Sonia said leases are hot, not buyers. This is confirming that, Sonia. This is confirming a 164 is not a number to be really excited about. Even the fact that last week, that's a 0.68 versus a 0.79. Here's another really interesting number. Look at the open house. Open houses are skyrocketing. 3761, largest or highest number of open house offerings since when? 3761, since October 2025. So what does that tell you? Right, so we've got the highest number of open houses since October of last year. Let's go ahead and start updating the monthly really quick. We are going to do the month to date. New listings, 1888. Price increase, 748. Price decrease, 3343. 82%. Low number. Way low. Man, price increases. I cannot get over the price increases. 332, 18% back on the market. There's another indication right there. You see how we hit the hot months? We had November, December, really high, hot activity index. And look at the back on the market. Just goes up. Back on the market goes up. The hotter the market, the higher the back on the market. Which is why I'm such a big fan of backup offers. Such a big fan, because it goes up. Your probability of getting that backup offer as primary goes up dramatically the hotter the market. Active under contract, 650. And we have pending. Man, y'all, we are 13 days, 12 and a half really, into the month, and we're at 370. So, man, we're at a 0.46 ratio right now. So the positive is 1,200. That's the difference between incoming listings and exiting listings being absorbed by the market. We're at plus 1,200. Last year, it was plus 1,381. We could very well beat last year. Let's take a look at withdrawn so far. 385 withdrawn and expired. We're at 119 expired. So let's go ahead and save this. And let me do a little bit of research right here on the back on the market. What I'm going to do is I'm going to go back 7 days. Not back on the market, on price increase. I'm going to focus on residential past 7 days and we're going to take a look at price increase. And let me select everything. I'm going to export this as a PDF. Here we go. Let's go ahead and close the new listing to pending ratio. These are all the price increases over the past 7 days. And we're going to insert pivot table. And we're going to do year built as a row. And then we're going to grab the MLS number and we're going to do field value count. And then we're going to do MLS number, show as grand total. And now we're going to sort this. There you go. What number did I say? I said 90%, didn't I? It's 88.07. Right there, 88.07. Let me make this a little bit bigger. 2005, these three, I guarantee you, are new construction. But if I say, well, let's just do 2005 and 2006, you're at 86.43. Builders. 86.43 of all price increases are builders. Over the past 7 days, these are all the ones. Let's do city. What cities are? Do I have city or zip code? I've got zip code. But let's sort this. Who's increasing the most, subdivision wise? Firefly Point, 78634. Meadow Lake Preserve. We got Pflugerville. You got Buda Kyle area. Let's do this. Let's do zip code. And what I'm going to do is I'm going to grab this and I'm going to add it as a subcategory under zip code. So let's go to data and 78640. So 78640, it's the number one zip code with the most price increases for new construction. 78640. Now you're looking at Euland, you're looking at Kyle. So those builders are just going up in price. I mean, come on, our Kyle experts, right? This doesn't have the builder. Let me do this. Give me a second. Is it okay if let me show you the MLS actually. Let me just get the MLS here for you. All right, this is what I'm going to do. I'm going to go back to my list. I do have builder. Okay, so here's the builder. Oh, perfect. I do have a builder. I've got a search created for builder. Where's the builder's name? Here's the builder. So now I can go to insert pivot table and we're going to grab the builder name, and then we're going to grab the MLS number and we're going to make this count, and then we're going to grab the MLS number again and we're going to do show as percentage of grand total, and now we can get Lennar. Lennar is the highest one. Let's get rid of blank. So Lennar, D.R. Horton, Highland, Coventry. But I would say Lennar is the highest one only because they've got the highest number of active listings on the market. That's really the only reason. And we have that information to prove. So if I go to Insight and Statistics and I go to New Construction Inventory, so let's just see last page. Lennar, let's see. Come on, last page. Go to the last page. And Lennar, Lennar has 400 and 439. Here's the interesting thing. Out of the 439 properties that they currently have on the market, 64.9% of those have had a price drop. But yet, when you look at the activity over the past 7 days, 127. So they have a total of 439. So 439. So let's do 127 divided by 439. So 28% of their active inventory had a price increase, but at the same time, 64% are down from the original price. What does that mean? Well, let me take a look at these 127 because I'm going to show you something really interesting here. Here's all the Lennar, and what I'm going to do is I'm going to copy this as a text so that I don't mess up the pivot table. So these are all the Lennar properties that had a price increase. Now, I'm going to go right here, insert, and this one doesn't have a price, and I'm going to say drop because you're going to see that out of all of these properties that had a price increase, most of them are down from the original price. How can that be? Well, let's take a look at some of these properties really quick. This one is pending. Look what they're doing. So they started at 290 and then decrease, pending increase. So they went pending at 258 and then increased it to 280. They came back on the market, drop, and then it went a few increases. 246 to 260. And then they're back to 236, and then they go 239, 238, and then they go up 1,000. Now they're pending. I hate it. I think I wish I just had access to these people's brain to just try to figure out why they think that this is an effective strategy. Like, I just don't get it. Okay, so we've got 319, 317, 318. Gimmick. So they're still lower than the original list price. And right there, we've got that information. We know that they're lower. Look at all these. These are all the ones that are lower. How many reds do you see? They're mostly reds. And some of them are just low by a massive amount. This one's up by 93,000. That must have been a mistake. Let's look at this one. Down $61,000. This is in Firefly Point. So I'm going to take a look at this one. This is going to be the last one that we look at. And let's look at the history of this bad boy. So we start off at 375. We go up by $9. Then we go up by $5,000. Then we go down to 314. Then we go up to 315, up by another $250. And then we go down to 312. Then we go to 314. And that's where we're at right now, is at 314. So it shows us that there was a price increase. Hey, it was a price increase. It doesn't, there's no way to export this right here. Like for me, like if I had my way on the MLS, it'd be like, okay, give me the whole detail, the whole history. I can't export that. All I know is there was a price increase. But when you see a number on the new listing to pending ratio that just jumps out like that, you know that the builders just got together and they said, hey, let's all go up in price at the same time. And let's just say that the market is amazing and we just all need to go up in price. It's like, wait, you're going up $1,000. You're down 60 from the peak? Like, how long have you been saying this? So I think it's more of like a desperate. As a matter of fact, I'm sure there's a ratio between like preemptive to the market slowing down. They start going up in price. I'm sure there's a way to calculate some of that. So there you go. Interesting data point that we now know exactly what's going on with those price increases. It's all coming from the builders. 87% of those are coming from the builders, and it just is what it is. Okay. Any questions, you all? Any questions? Any questions on this? Let's take a look at the daily briefing. We are only 337 properties short of the all-time record high number of active listings. The question is, do you think that we will beat that? Because few interesting things are happening. I went over this on the meeting on Friday, where we're just getting positive day after day. On the weekly, we're up 236 listings. We're up week over week. So we're at 17,809 as of really early this morning. And right now we're at 17,764. So it's gone down a little bit because now agents are making those properties pending, right? But this morning, 17,809, a plus 60, which is normal. We do see this plus happening. So we're plus 355 monthly, and we have a gap of 337. So we're just right there. I mean, don't know that we're going to surpass the 2025 peak. We're noticing listings coming on the market at a delayed phase, right? We're entering our 7th week in a row where new listings are now exceeding last year. 53.7% of the active listings have had a price drop, or up 0.67% year over year on the number of active listings on the market. Pending listings, we are up 3.6%. So we are exactly where we were 2024 on pending listings. That's going to be your bluish, kind of blue looking line. And the gray line is going to be 2024. So we are spot on right now, 2024. Interesting thing is that 2025, we were gaining pending listings. Right now, we're losing pending listings. Very interesting. Because of that, the activity index, we're now up 3.5%. Resale activity index is going down. Melanie says, could go back up on the pending side. Absolutely. Absolutely. I think a lot of it is going to have to do with rates. I was a little bit disappointed with the rate sheet this morning. This is going to be a super important week for the bond market. If you look at the rate sheet that we had this morning, 6.75. And if you look behind me, we're up 3.8 basis points. So this is the highest we've had in the past 5 days, 6.75 on conventional 30-year. And this is going to be a crazy important week because tomorrow we have the CPI, Consumer Price Index, followed by PPI on Wednesday, Producer Price Index. A lot of inflation data is coming out. And they're already expecting CPI to stay. They think that the month over month is going to go down. I think they're out of their minds. They think CPI month over month is going to go down. I don't think so. And they're saying that CPI, core CPI, excluding food and energy, is going to stay flat. They think that CPI is going to go up by 3.8% year over year. Y'all, I hate to say it. I think it's going to be hotter than this. Like I'm not bullish on CPI because of energy. I mean, look what happened with the war with Iran. And this is from June. We still had really high gas prices in June. So I'm not feeling that negative 0.1 right there. And I think the market's agreeing with me. But I'm going to be glued to my app at 7:30 a.m. to see how the bond market, the futures bond market is. Actually, the bond market will be open by then. So how it reacts to that. So, but we are noticing a little bit of a momentum slowdown on pendings. That's why the activity index on the resale is 17.4. Let's take a look at the months of inventory. We're down 4.5% year over year. We are projecting right around, it's a little bit on the low side of things. So, I do expect this to go up. I'd say we're going to be flat on the number of sold properties. We're up 9.1% on cumulative sold. So that's a really good thing. So once again, lagging indicator, but I'll take that all day long. Pricing, on the other hand, just skyrocketing. The average sold price for July, you all, is up 11.2% so far year over year on the average sold price. The median sold price is up 5.8%, 25 grand the median sold price, which is just unbelievable. A lot of that has to do with the bifurcated nature of our market. The upper 25th percentile doing extremely well, up 7.3%. We were flat on the bottom 25th percentile going on about 10 days. That did reverse. That's now down 1.5%. So the median sold price, we are down 17.27%, but we're up 5.8% month over month, which is great. Another number that just backtracked a little bit, the number of cities up in price year over year on the median sold price. So what this does is this takes every single property that closed in 2025 and every single property that's closed so far year to date on 2026. And it just shows you, is it going up or down in value year over year? That's all this does. On Friday, we had 8 cities that were up. Right now, we've got 7 cities that are up. Lago Vista kind of backtracked just a little bit. Let's look at a few more things. There are 2.6 sellers per buyer in the entire metro area. 0 cities are hot. We now have 0 cities that are warm. 19 are balanced. A vast majority of the market is indeed a balanced market. And 11 are cool. So we are very much a balanced market. Now, one interesting thing that I did notice when you look at the activity index resource that we publish, the last page has this dot plot graph that I really like. It just gives you the lagging indicator compared to the leading indicator, the lagging indicator being months of inventory, and you compare that to the leading indicator. And this black dot with this line is going to be the median reading of all 30 cities. We've got the same thing for zip codes. So when you look at the zip code activity index, the third to last page does the same thing. So you can see that as the dots shift over to the left on the cold side of things, they naturally start going up, right? So the lower the activity index, the higher the months of inventory over time. But we did notice that the median of all 30 cities now under that 20% mark, which is really interesting. Last month, excellent month. Absorption ratio, sold divided by active, came in at 20.3, beating last year's 18.1. The July figure will not be updated until about the 25th of the month. And then the market flow score, and that's going to be your 0 to 10 reading for the market. This is the, where's the market? 0 to 10. 0 meaning there is no market. Nothing's happening. It's terrible. Only 1 month in the past 21 years had a 0. That's January 2009. And then 10. Best market in the world. It cannot possibly get any better. We've had a few months of 10 reading, 2020, 2021, back-to-back 10 readings. I mean, 2020, we had 4 months with a 10, which is crazy. Right now, we're at 5.6, so we are above that median mark. We are beating last year. Better yet, we're beating the past 2 years because 2024 was 5.5. Now, July tends to go down. Melanie said, was 2009 when you had like 10 deals? Well, it wasn't 10. It was a lot. It was 4 or 5. I think if it was 10, I think I'd have like a nervous breakdown. It was like $2 million worth of deals fell apart within 3 or 4 days of each other, and I had nothing. Yeah, that was 2009. And I had nothing. I did not get a single phone call for 4 months. Nothing. Absolutely nothing. Couldn't get a lease. And it was really funny because it was brutal. And then a buddy of mine called me up and he's like, hey, do you want to be like my director of sales? It was a tech company and they were doing super well. I sold him a house in like Rob Roy. His partner just bought a Lamborghini and he's like, man, I need a director of sales. Do you want to be a director of sales? And it was right like 3 months into like that 4 month where like, I could not sell anything. It was tempting. I was like, wow, man, guaranteed paycheck, right? And I said no. So I'm just going to keep on doing this. Crazy thing is that like 5 years later, that company got sued. They went bankrupt. Like he lost a bunch of money. Like, his partner lost everything. The company went totally bankrupt. So, it was an interesting thing. So I'm glad I stayed. I'll say that much. Really glad, because the same thing is happening right now. Because when you look at one of my favorite charts that we publish, and it's this one right here, even though that was a really, really brutal year, very hard year, both 2008 and 2009, it really set us up to 2012, 13, 14, 15. And this right here, between 2012 and 2020, it's like the golden age of real estate, especially 2013, 14. It was just, record month was July of 2013. I love this chart. So what's our takeaway for today, you all? Takeaway for today. One is, I'm going to keep on saying this, hyperlocal market. Hyperlocal market, because look at months of inventory, which is a lagging indicator. We have to keep that in mind. 7739, only 1.84 months of inventory. But even when you look at the activity index for that zip code, it's 44.22. Insanely hot. Ridiculously hot. So you've got to be obsessed with that local market. Give advice for your client that is relevant to that specific local market. There is no such thing as the Austin market. When you've got one zip code that has a 44.22% activity index, and then you've got the 7730 zip code with 9.59, you've got to be hyper local. You've got to be obsessed with what's happening within that specific market, more so even like that specific subdivision. And I'm not just talking about when you're working with buyers, sellers, when you're picking an open house, when you're making the decisions to where do you work as an agent. So for example, let me go ahead and just show you a really cool little trick that I recommend that you do. If someone offers an open house for you, go into the map feature. Let's just say it's right here, right? Let's say, hey, agent, I want you to do an open house right here. Just grab a radius and just do from the location of the property, do about like a mile radius. You see how you can do like a mile radius? Do a 1 mile radius and then just do this. Pending. So what's that number? Grab your calculator and we're looking at 10 pending. Oh, my goodness. 10 divided by, just hit active, 50. That's 20%. So 20% activity index. Well, what does a 20% activity index tell you? Right there. That's like the contraction danger zone. So if you choose to do the open house in that area, don't complain about it being slow because you've got access to the data. Like I would have told you, 20%, you might want to pass on that. Like that's really on the lower side of things. Well, then maybe another agent offers you an open house like right here, or you're out there trying to find an open house or something like that. So I'm going to go right here and let's just do 1.1 is fine. So now this is going to be a little bit different. So we're going to do 9, okay, 9 divided by 33. 27% activity index. You might not think that's a huge amount, but the difference between 20 and 27 as a percentage is what? It's huge. It's huge. It's like 30% better, right? So it's a pretty big difference. It might not seem like a big difference, but that's the difference between a contracting market and a equilibrium market, balanced conditions, steady absorption. That's the difference between that. So that's where you have to be really, really obsessive that these tiny little movements make a big difference when you're looking at a specific property, looking at a specific area. We're going to do one last one. Let's say you've got a possibility of an open house right there. So let's go back here and it's going to be 8 divided by 27. So let's go 8 divided by 27. Almost 30% activity index. So the difference between a 20% activity index and a 30% activity index is huge. And of course, if you look at some of the other ones where you might have a listing, and let's kind of go one. I keep on saying it's the last one, but I love doing this. I could just do this all day long. And let's just say you're like, oh, I just got a really cool listing right here in, Manor area, which is, a lovely area. It is. I actually like that area. So Presidential Meadows, and you're like, I just got a listing here. And now let's just do this one really quick. So we're going to go 22 divided by 126. 22 divided by 126. Yeah, I'm not going to do it. I'm not doing an open house there. Like, why would I choose a 17% activity index where I could go a 29% activity index? I'm going to put my effort towards an area where I know that people are absorbing that inventory, right? That's that key word. It's steady absorption versus what? Market stalls, supply imbalance, price decline. And then you've got certain areas. I mean, this one is 17%. I could find you areas that are under 15%. It's buyer paralysis. Now, I'm not going to do an open house there. It's going to be a waste of time. I'm going to do an open house here in the equilibrium. Like, what is going on with this specific product? And by the way, here's the other thing to keep in mind is that I'm going to go property condition and I'm going to go resale because that right there changes the dynamic. So now we're looking at 15 divided by 99. Okay, 15% activity index, that's what? That's right at the crisis. Like that's at the buyer paralysis. I got rid of new construction and I said, okay, well, just give me the resale market. That's even worse. So then why would you do an open house there? So be obsessed with being data driven and be obsessed with that activity index when you're representing a buyer, representing a seller, whatever the case might be obsessed with that. Yo, it is 10:55. Any questions, comments, concerns, criticisms, or complaints? Any questions? Going once? Going twice? All right, you all. that is all I have. Thank you all so much for joining. Super appreciate it. I hope you have a great day. I will be sending you this information here, so be on the lookout for this video, and I will chat with you later.